Hello traders, this is Blake Morrow. You are listening to the Daily Roundup webinar. I hope everybody's having a great trading session. So first and foremost, we should talk about this euro. This euro exploded higher right into really key resistance. You know, I was really hoping for a little bit deeper of a pullback in the euro, and we didn't get it. But what we did push into, and this is pretty important, let's go over to the daily chart and actually let's zoom, okay? Now, you can see the highs back in 2018 to today, right? It's not just today, it's, the spike high from, the beginning of the lockdown for COVID, spike up just last week, and where we're at right now. Now, if you're long, if you're long the euro, you need to take note of this. But I think more importantly is if the euro actually breaks above 114, because the natural inclination here, and let me just speak on for somebody who's not looking at looking at the looking at the longer term charts. Okay, what the natural inclination is going to be here is to sell it on a rally above these highs as you approach this 115 level, right? That's going to be like the natural inclination. But I'm trying to point out here is if we do break out, this is a bigger breakout than I think you'd be short-sighted by not looking at the longer term breakout of the euro. Does that make sense to everybody? Did you guys, does that make sense? Oh, I just want to make sure that that made sense as far as, I just want you guys to know that if it does break out above 114, Gavin said yes, okay, thank you. Yeah, Dom says not worth banking 20 pips long, right? If it breaks, then I think it might actually break, or it gets up towards resistance and you go, oh, I'm just going to go ahead and fade it. But I mean, the fact of the matter is if we break through this, okay, if we break through this, the chances are it's going to go much higher than this. It's probably going to go maybe to the 127% extension towards 117. Now, let's stop for a moment and ask ourselves, why would that happen? Well, and Tiana said if the day wasn't already so stretched, I would be more on the long side for that. But let's think about what are the reasons why that could happen. The big reason why, as you guys know, is this the breakout in equities, right? Now, you look at the S&P and you go, well, the S&P is down, Blake, I know that, but the NASDAQ continues to break out. And that's the one thing that I've been, trying to get everybody to keep an eye on is watch the NASDAQ. The NASDAQ's breaking out. Will the S&P eventually follow? I think so. Will the Dow eventually follow? I think so. And if you look at, the Dow and the S&P right now, I mean, they're holding up relatively well. They're not rallying, but they're consolidating, I guess you can say. So let's say we work off some of these overbought conditions for the next 2 days, right? And then, following on Wednesday, the Fed affirms to all of us that they are going to continue to throw unlimited amounts of cash at the market. The stock market breaks out again. Well, the dollar's probably going to weaken and take the euro, past this resistance. So I'm trying to think why we'd see continued dollar weakness, why we would see continued dollar weakness going into the remainder of the week and how it could actually break out. I think we just have to continue to pay attention to stocks. I think the stock market continues to stay strong. Now, a couple other things that I'm really focused on right now is obviously the Aussie pulled back a little bit. And I know it's got probably a lot of bears excited. Same with the Kiwi, we pulled back a little bit. But are we pulling back or are we just consolidating? I mean, right now, it looks like a consolidation. If we closed on our lows, I'd be a little bit nervous about being long like the Kiwi or the Aussie, all right? If we closed on the lows. But as of right now, it looks, like we're just consolidating. We're just rejecting some resistance and consolidating. One of the things that's keeping me on the positive side of risk, meaning, I think that stocks are still relatively well bid, is the US dollar Mexican peso. The peso can't get above 22. So if we can't get above 22, the risk is still that we sell off and hit the 200-day moving average, or maybe even this breakout point around 20, what is that, 2020, 2030? All right, somewhere in this neighborhood. So as long as this dollar Mexican peso continues to stay heavy, you got to imagine that stocks are going to stay bid. And that's also, taking us back to the Aussie dollar. Okay, the Aussie dollar rallying hit resistance, right? We hit resistance and we rejected it. So imagine it like a battering ram. This is big resistance. We're going to hit it once, maybe hit it twice, and maybe on the third time we bust out. And that's when we start building all the stops above the 70.50 and plow through those and trade up to 72 cents. I'm not. Let me take a step back here and just say that I don't want to be bullish equities. I don't. I think this is ridiculous what's happening with equities, but it is what it is, right? The equity markets continue to plow higher, and it seems like, as I said this morning, all retail is going to be caught chasing this market. Everybody that's the sports bettors, the Robinhood traders, hedge funds, everybody's going to be chasing this market higher, and they continue to chase this market higher, and it's probably going to end in tears. I would assume that the S&P probably rallies to 34, 3,500, and then fails up here somewhere. Once all the shorts have got squeezed out, all the retail markets completely in, right? So anyway, Dominic said yield curve control might be announced tomorrow. Might be just rumors, but they say the Fed needs lower yields on the 10-year, which also mean we're going to be pumping for longer. Yeah, that's huge, right? Yield curve control. That's not within their mandate, but is that something that they could possibly announce? It sure is. Catherine, hey, Kate, what's happening? Catherine asked, could I look at crude? And you betcha. I'll be more than happy to. So let's take a look at crude oil. So crude, interesting. Yesterday we had you could say it was, a gravestone doji, right? And we've had limited downside follow through, which is surprising to me, because this is probably one of the more bearish candles that you're going to see. I know it looks like a doji, but it's a gravestone doji, and very limited downside follow through as of yet. But if equities continue to stay higher, I don't know what's stopping crude from going to the 50% retracement here at 38.33, or maybe the 161% extension of this last move at $40. Now, you might be looking at a different contract, or not the continuous, maybe a front month or whatever. So just what I would do is take the highs from January to the lows, see if you can come up where the 50% comes in, and 161% extension of this last move lower. And I think that's going to help identify where crude, I think crude's going anyway. But look at the NASDAQ. Did we just hit new highs on the day? God, this market is unbelievable. It's unbelievable. Yeah, that was a 15-minute chart. Like I said, I don't want to be a stock market bull here at these levels, but you can't. How can you stand in front of this? It's a one-way market. Yes, we got a little bit of two-way action today, but equities, in FX, but equities continue to plow higher. Let's take a look at these yen pairs really fast. So the dollar yen, really at key support here, right? So this is the trend line we talked about earlier today. It is, we are below the neckline, and I think this is just on overall dollar weakness. But look, if you want to buy yen pairs, like euro yen, right? Euro yen had a nice, look at the daily candle. We've got a nice pin bar going right now, but a little inverted head and shoulder pattern. we could start reaching for 123, 123.50 if we really want to, you know, in the coming 24, 48 hours. Pound yen had a nice little pullback here. And, you know, here's the guppy. Trendline resistance coming into play here. Aussie yen, I mean, we had a little bit of pullback. Probably got some traders, you know, out. Break above 75 and a quarter. It's going to be pretty bullish. New Zealand yen, you know, we break above 70.50. It's going to be bullish. Canadian yen, you know, above 80.50 is probably going to be, you know, and when I say bullish, that means we're probably just going to gun for these, you know, trend highs again. But that will all come if stocks continue to stay well bid, right? And for right now, it looks like the stock market is staying well bid. All right. Nissim says, or asked for gold. Yeah, we'll take a real quick look at gold. And if I butcher your name, I'm so sorry. Okay. So gold, you know, it's interesting with this. I'm not excited about gold where we're at right now. I just think we're in a big consolidation, but high, lower high. So, you know what I mean? We're still making lower highs. I know we rallied pretty sharply over the last, you know, couple of days, but I think if it's going to fail, it's probably going to fail around here. But I look at like the daily chart, and all I think right now is just a consolidation. You know, I'd be more prone to try to buy the gold market if we dip back towards 1600, maybe the 200-day moving average somewhere down here. And I mean, with stocks as strong as they are, if with stocks as strong as they are, I would expect that gold, you know, continues to ease up a little bit, right? Okay, so I want to thank you guys for tuning in today. And for anybody who's listening to this after the fact, if you are not in the chat room with, like, you know, myself and Dominic and Tiana and, you know, Nissim and, you know, others that are, and Catherine that are asking questions, make sure you join ForexAnalytix. It's only $1 for 10 days. Then you can be listening to this live when I'm doing this instead of, you know, almost 24 hours later. And for those of you that are listening in, thank you for your continued support, and thanks for being in the chat room with me. I love hanging out with all of you. So have a great one. Catherine, you're welcome. And you guys, Brock, you're welcome. You guys all have a great one. I'll talk to you tomorrow morning.